You don't lose money in crypto the moment you buy it. You lose it the moment you believe the story more than the structure. That's the uncomfortable truth. Because most people who lose money in crypto aren't careless or uninformed. They're early. They're curious. Sometimes they're even right. And yet, they still lose. Right now, crypto is back in the spotlight. Prices move again, headlines return, influencers resurface, and the same quiet promise fills the air. This time is different. So let's pause the hype and ask a harder question. Is crypto a brilliant scam, or is it something more subtle? A system that works exactly as designed while quietly draining those who misunderstand it? To answer that, we have to rewind. Crypto doesn't begin as a scam, it begins as an idea. In 2009, Bitcoin appeared after a global financial crisis shattered trust in banks. Governments rescued institutions. Ordinary people paid the price. Trust collapsed. So when someone proposed money without banks, without gatekeepers, without permission, people listened. Not because it promised wealth, but because it promised fairness. And technically, it worked. A blockchain is just a shared ledger. Imagine a notebook copied thousands of times around the world. Every transaction is written into every copy. No single owner, no easy cheating. That part isn't magic, it's engineering. For years, Bitcoin barely mattered. It was slow, clunky, mostly ignored. Then the price started rising, and that's when everything changed. Because the moment price enters the room, psychology takes over. Crypto stopped being an experiment. It became an investment, then a movement, then an identity. Coins multiplied, tokens launched daily, each promising faster tech, bigger impact, a new future. Here's where the quiet trap appears. Most crypto projects don't generate cash flow. They don't earn profits. They don't pay dividends. So how do you value them? You don't. You price them. And price depends on one thing: what the next buyer is willing to pay. That alone doesn't make crypto a scam. Gold works similarly, but gold has thousands of years of shared belief behind it. Crypto has online communities, hype cycles, and influencers with referral links. Now let's talk about the math people avoid. If an asset doesn't produce income, the only way to make money is if someone else buys later at a higher price. That means growth isn't optional, it's required. New buyers must continuously enter the system to support earlier ones. That doesn't mean fraud, but it does mean fragility, because when growth slows, there's nothing underneath to catch the fall. No profits, no guaranteed demand, just belief. And belief is powerful, until it isn't. This is why most people lose money in crypto even when they're right. They might understand the technology, they might spot real innovation, they might buy early. But markets don't reward being right, they reward timing. And crypto is ruthless about timing. Early buyers win because later buyers arrive. Late buyers lose because growth slows, not because the idea failed, but because the math ran out. Here's the irony. Crypto was designed to remove trust from the system. Instead, it concentrated trust in founders, influencers, and exchanges. People said, "Don't trust banks," then handed billions to platforms with no transparency, no regulation, and no safety net. When those platforms collapsed, everyone was shocked. They shouldn't have been. Look at incentives. Exchanges make money from trading volume, not your success. Influencers profit from attention, not accuracy. Founders often hold massive token allocations created at launch. That doesn't mean every project is malicious, but it does mean hype is rewarded more than honesty. Quiet builders don't trend. Big promises do. Now, zoom out. Crypto doesn't move on adoption. It moves on liquidity. When interest rates are low and money is cheap, crypto surges. When rates rise and liquidity tightens, crypto bleeds. That tells us something important. Crypto doesn't behave like a replacement financial system. It behaves like a high-risk speculative asset. which raises an uncomfortable question. If crypto were truly a revolution, why does it collapse when central banks tighten policy? A system meant to replace money shouldn't depend on cheap money to survive. So, is crypto a scam? Not in the simple sense. There is real technology here, real innovation, real potential, but it is a system where most participants misunderstand the game. They think they're investing in technology. They're often speculating on attention, liquidity, and timing. They think being early is enough. They forget staying early is almost impossible. And that's the final truth. Most people don't lose money in crypto because it's fake. They lose money because it works exactly as designed. A system that rewards early belief, punishes late certainty, and quietly transfers wealth without ever needing to lie. So the real question isn't whether crypto will survive. It probably will. The question is whether most people will ever realize which side of the system they're on before the math reminds them.